Welcome to our Chinese Finance and Economy Briefing Program. In today's top stories, we have President Trump's dramatic decision to impose a staggering 104% tariff on imports from China, set to take effect just after midnight. This bold move comes amidst ongoing trade negotiations and has sent shockwaves through global markets, raising fears of a recession as consumers brace for rising prices. Meanwhile, Alibaba Cloud is making waves on the international stage by enhancing its generative AI tools for global users. With new services aimed at small and mid-sized businesses, Alibaba is not just the top provider in China but is also gearing up to compete with giants like Amazon and Microsoft. The company is investing significantly in cloud and AI infrastructure to broaden its reach and attract international customers. Lastly, in response to the economic challenges posed by the trade war, China is stepping up to support its university graduates. With plans for a comprehensive employment assistance system, the government aims to help millions of new graduates find jobs and navigate the tough job market. As concerns about youth unemployment rise, this initiative is crucial for stabilizing the domestic economy. Please stay tuned for more detailed coverage. CBC: The United States is set to implement a staggering 104% tariff on imports from China, effective shortly after midnight, which has sent shockwaves through global markets that were previously buoyed by hopes of potential negotiations. This drastic measure comes as President Trump seeks to counter China's retaliatory tariffs, which he perceives as a form of blackmail. As the tariffs loom, U.S. stocks have begun to retreat, with fears of a recession mounting and consumers rushing to stock up on goods before prices rise. Retailers are already feeling the pinch, with companies like Micron announcing surcharges and clothing retailers delaying orders, leading to a palpable sense of urgency among shoppers. Nikkei Asia: In a bid to extend its reach beyond China, Alibaba Cloud has unveiled an enhanced suite of generative artificial intelligence tools for international users. These tools, designed to streamline business operations, are being rolled out from Alibaba Cloud's Singapore facilities and include capabilities for document generation and multimedia content creation. As Alibaba aims to solidify its position in a competitive global market dominated by giants like Amazon and Microsoft, the parent company has committed to a significant investment of 380 billion yuan in cloud and AI infrastructure over the next 3 years, signaling its ambition to not only lead in China but also capture a larger share of the global cloud services market. Australian Broadcasting Corporation: As the deadline for the 104% tariffs approaches, President Trump has expressed a willingness to negotiate with China, stating he is waiting for their call. However, administration officials have indicated that negotiations with China will not be prioritized, focusing instead on allies like Japan and South Korea. Amidst these tensions, global markets are showing signs of recovery after a tumultuous period, with hopes that Trump might reconsider his tariff strategy. Meanwhile, European leaders are contemplating their own counter-tariffs on American goods, highlighting the escalating trade war's potential to disrupt established economic relationships and impact industries on both sides of the Pacific. Yahoo US reports on the dramatic impact of President Trump's recent tariff announcements, particularly his Liberation Day plan, which imposes a new 10% minimum tax on all imported goods and steep tariffs on key trading partners like China, Japan, and the EU. The immediate reaction from the stock market was a sharp decline, reflecting investor fears that these tariffs could disrupt supply chains and spur inflation, leading to a potential economic downturn. The volatility continued as Trump hinted at further increases in tariffs and conflicting reports about his tariff strategy emerged, causing wild market fluctuations. Understanding the stock market, which consists of various exchanges and indexes like the S&P 500 and the Dow Jones, is crucial as these tariffs directly influence stock prices based on supply and demand dynamics. In response to the economic pressures stemming from the trade war, the South China Morning Post highlights China's commitment to support its university graduates facing a challenging job market. Chinese authorities have announced plans to create a comprehensive employment support system over the next 3 to 5 years, which includes skills training, career guidance, and recruitment assistance. This initiative aims to stabilize the domestic economy and ensure high-quality employment opportunities for the growing number of graduates, which has reached over 12 million this year. With youth unemployment soaring to alarming levels, the government is focused on addressing economic headwinds and enhancing job creation to combat the adverse effects of the trade conflict with the U.S. Nikkei Asia covers the diplomatic efforts between the EU and China amidst the escalating trade tensions initiated by Trump's tariffs. European Commission President Ursula von der Leyen has called for responsible tariff responses from China and emphasized the need for a negotiated solution to the trade issues exacerbated by U.S. policies. Both leaders discussed the importance of maintaining open trade and investment, with China expressing a willingness to enhance political trust with the EU. The ongoing tariff battles have not only destabilized financial markets but also raised concerns about a potential global recession, prompting the EU to consider its own counter-tariffs in response to Trump's aggressive trade strategies. South China Morning Post reports that U.S. consumers are bracing for significant price hikes on Chinese goods due to new tariffs imposed by President Donald Trump. As the deadline looms, American tech giant Apple is rushing planes full of iPhones from China and India to meet the demand of anxious consumers eager to upgrade their devices before prices soar. Despite efforts to diversify supply chains since the trade war began in 2018, nearly 90% of iPhones are still assembled in China, making them vulnerable to the newly announced 34% tariffs. The Peterson Institute for International Economics warns that electronics will bear the brunt of these tariff increases, which could lead to higher consumer prices across various sectors, including footwear and textiles, where a significant portion of imports still come from China. In another report from South China Morning Post, the escalating trade war is creating uncertainty for workers in China's Shine Village, a hub for small clothing manufacturers near Guangzhou. Workers, like Wu, are feeling the pressure as their hours are cut and fears of job losses grow due to potential tariff increases on Chinese exports. With Trump threatening to impose tariffs as high as 100%, many workers are left wondering about their futures. Meanwhile, companies like Shine are scrambling to adapt, as the expiration of the de minimis exemption, allowing low-value goods to enter the U.S. duty-free, could drastically alter their business models. As cross-border merchants prepare to rush shipments before the new policy takes effect, the textile industry braces for significant impacts from the ongoing trade tensions. In a strategic move, Ant Digital Technologies, a subsidiary of Ant Group, has chosen Hong Kong as its international headquarters to focus on artificial intelligence, AI, and Web3 technologies, according to a report by South China Morning Post. This decision underscores Hong Kong's ambition to become a leading tech hub, leveraging its robust financial ecosystem to enhance digital asset circulation. Ant aims to collaborate with local universities to advance AI and blockchain initiatives, reflecting a broader trend of innovation in the region. As the company ramps up investments in AI and develops platforms for asset tokenization, it seeks to position itself at the forefront of the digital revolution, while also navigating a significant reorganization within its corporate structure. CBC reports that world markets experienced a brief calm after a tumultuous three-day sell-off that erased trillions in value, as tensions between the US and China continue to escalate. China's firm stance against US tariffs, promising to fight to the end, has left investors on edge, with the VIX volatility index remaining high. Despite a slight recovery in markets, sentiment is fragile, particularly as US President Trump threatens to impose additional tariffs that could push total duties on Chinese goods to an unprecedented 104%. Analysts warn that this escalating trade war risks derailing China's export-driven recovery and could lead to a battle of wills rather than economic negotiation. Meanwhile, the EU is preparing to counter with its own tariffs on US goods, highlighting the growing global trade tensions. As the situation unfolds, the economic landscape remains uncertain, with calls for a fair trading system becoming increasingly urgent. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.